This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's crude oil imports from top supplier Saudi Arabia rose 8.8% in March from a year earlier, driven by strong demand and as shipments delayed due to a port congestion finally arrived. Imports from the United Arab Emirates also rose again, up 86%, as some Iranian barrels were believed to have slipped in. Shipments from Saudi Arabia were 7.84 million tons, equivalent to 1.85 million barrels per day, BPD, data issued by China's General Administration of Customs showed on Tuesday. That was higher than 1.7 million barrels of oil per day a year earlier, but below imports of 1.94 million barrels of oil per day in February. Saudi Arabia retained its position as China's biggest crude oil supplier for a seventh consecutive month.
Global commodity prices are expected to stay firm around current levels in 2021 after recovering in the first quarter buoyed by strong economic growth, the World Bank said on Tuesday. Energy prices are expected to average more than one-third higher this year than 2020, with oil averaging $56 a barrel, it said. Prices should rise to $60 a barrel in 2022, broadly in line with their 2017-19 average. Metals are expected to climb 30% and agricultural markets are forecast to rise nearly 14%. Still, the World Bank said its outlook is heavily dependent on progress in containing the COVID-19 pandemic as well as policy support measures in advanced economies.
Moving on to the top news in the energy sector.
Global CO2 emissions from energy are seen rising nearly 5% this year, suggesting the economic rebound from COVID-19 could be anything but sustainable for the climate, the International Energy Agency said on Tuesday. The IEA's Global Energy Review 2021 predicted carbon dioxide emissions would rise to 33 billion tons this year, up 1.5 billion tons from 2020 levels in the largest single increase in more than a decade. This is a dire warning that the economic recovery from the COVID crisis is currently anything but sustainable for our climate, IEA Executive Director Fatih Birol said.
Oil fell by $1 on Tuesday, pulling back from one-month highs, on fears that India, the world's third biggest oil importer, may impose restrictions as coronavirus infections and deaths soar in that country. Oil prices have risen steadily this year on expectations of a recovery in demand, but while the United States and China are rebounding, numerous other countries are not. Given India's position as a major crude oil importer in the world, new restrictions would be very bad for the energy complex, said Bob Yorga, Director of Energy Futures at Mizuho.
Next, we have the top news in metal markets.
China will take steps to stabilize raw material prices and strengthen supervision of the market after a spike in prices for commodities such as steel, non-ferrous metals and petrochemicals, the country's industry ministry said on Tuesday. Rising commodity prices, driven by higher raw material costs, a recovery in downstream demand and speculation from the financial market, have increased Chinese manufacturers' costs and squeezed margins, Ministry of Industry and Information Technology spokesman Huang Liban said at a press conference. This round of commodity prices rise has had impact on the manufacturing sector but is manageable overall, Huang said.
A rally in copper prices towards 10-year highs paused on Tuesday as rising coronavirus infections pulled global stock markets back from record levels, but strong demand and tight supplies are expected to fuel further gains for the metal. Benchmark copper on the London Metal Exchange, LME, was down 0.8% at $9,298.50 a ton by 16:45 GMT after touching $9,483, its highest since February 25. Demand is picking up as we get the second quarter underway, said independent analyst Robin Barr. We will now look at the top news in the agricultural sector. Bangladesh's state grains buyer has issued an international tender to purchase 50,000 tons of rice, traders said on Tuesday. The deadline for submission of price offers is May 2. The announcement is in addition to a separate tender from Bangladesh to buy 50,000 tons of rice for import using land transport by railway, closing on April 26. Bangladesh has issued a series of rice tenders in recent months amid dwindling supplies and a surge in prices.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.